Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. Today we are up 2.5% on the 1 hour chart. We are touching or very near overbought RSI. The MACD is approaching positive, and on the 4 hour chart we see convergence forming on the 4 hour negative MACD, and we see a very nice spike in volume. And today was the EIA oil inventory, and on the daily chart we still have we made a divergence earlier this week, and we begin to start to see a convergence, so a healthy trend and formation as indicated in last week's report. We saw lower, or I should say higher lows, and it's in respect to this trend line. We have not breached below it, and we have not closed below the 50-day moving average, so that's a positive sign that this uptrend is still intact. And as for resistance, this 200-day moving average is acting as a real resistance, since we are having trouble breaking above it since early November, or November 4th. Eventually I do see us breaching above it and closing above the 200-day moving average very soon, and the next resistance that I see will be around the price of $12.20. Reason why: we have a price concentration, a very small price concentration around this level, and since we are below this price level, it acts as resistance. And as for support, the next support will be if this does make a reversal and we head down lower, this support breaks as well. We may find support around this price concentration. This price concentration had support back in mid-October, early October, same in early August, up to late August. And that is around the price of $11.15. So if we were to move on higher, that price movement is roughly around 2.7% to the upside, and to the downside is roughly 6.1% to the downside. So the forecast model is now available in the link below, so do check it out. If you examine WTI crude oil, we now have gush and drip, and if you configure the settings, you'll get the results of the models that we examined in this video, so do enjoy that. Again, it's in the link below, so do check it out. So back to the forecast model, I'll go day by day where WTI crude oil will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to December 28th to March 25th, 2010. So let me point out why these two charts are similar. So what we have in the current trend, we started off touching the upper Bollinger Band, and then we proceeded to break down to touch the bottom Bollinger Band. And then after touching the bottom Bollinger Band, we average above the middle Bollinger Band for several days, and after that we start to see it revert back to the mean, or to touch the middle Bollinger Band right towards the end. So we see those points there, and we start to see a similar pattern shaping. We start off touching the upper Bollinger Band. After that we touch the bottom Bollinger Band, and as you know, we start to see an average above the middle Bollinger Band, the uptrend right there, and lastly we have it revert back to the mean to touch the middle Bollinger Band where we left off in the current trend. What we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was December 28th, 2009 to March 25th, 2010. Back then, WTI crude oil was up around 7.6%. So I do see WTI crude oil may head higher in the next coming days, but I'm not sure it may head that much. But overall, WTI crude oil may head higher in the next coming days. So this forecast model is now in the link below, so do check it out and examine all the other models. And if you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.